Hi everyone and welcome to today's morning report on Tuesday the 10th of May with me, Rich Pro Market Analyst at Antec Markets. We've got a pretty decent open actually to the European trading session. All the markets, FTSE, CAC and DAX, all up about 0.7, 0.8%. Decent bounce. And that's sort of come across a sort of a general improvement in risk appetite really as the European session has got underway. There was no real direction off the Asian markets, although the equity markets were broadly higher due to the weakening of the yen actually that we'd seen overnight, and also the Chinese inflation data, which came in slightly better than expected on the PPI, basically in line on the CPI, but sort of suggests a settling of inflation, and that improvement PPI is generally seen to be a decent sort of lead through for trade really. So that is an interesting indicator there. But yeah, generally speaking, we've got a slight improvement in risk appetite. The dollar movement in the last few days has obviously been stronger in this recovery, but it's just started to stall a little bit because you've obviously got that improvement in the dollar following on from the yen weakness. So dollar yen is about 0.5% higher, 60 ticks up on the day. But you're seeing the other forex majors sort of compensating for that. You're seeing the euro is slightly stronger, sterling slightly stronger. You're also seeing the Aussie dollar again slightly stronger. So you're sort of seeing basically this the dollar index, which is sort of slightly lower today, and not only that, you're seeing the oil price, which has started to form a bit of support as well. Sort of big, sort of zoom in a bit more there. You can see big reversal, big one-day reversal on that candle, but I mean it's obviously just reflects this very choppy trading period we've got on the oil price. Support around 43.20, which is an old breakout level, actually, old sort of pivot level. It's holding on to that level at the moment, and just slight gains on the day, just helping risk appetite as well. So it's pretty much all feeding through to gains on the equity markets and slightly improved outlook on the FX markets as well. We've got slight bit of support coming in for the precious metals as well, for gold and silver. So what else have we got to look forward to today? Well, there's not a great deal going on today. Again, we've got the UK trade balance at 9:30. Expected to improve very slightly, very slightly, to 11.3 billion on the deficit. So just a very marginal improvement, nothing too significant there. And then we've got the JOLTS this afternoon, the US JOLTS jobs openings. And that's expected to be 5.43. 5.43. So again, basically, just sort of in keeping with sort of the figures that we've had in recent months, really. They're basically in line and sort of flattening off now. So those jobs. JOLTS jobs openings are beginning to sort of plateau off, and that's interesting, seeing as arguably we're seeing a slight sort of plateauing in the labour market potentially, and again that could be a reflective of the sort of sign that inflation or wage growth is starting to pick up. The jobs unemployment data is starting to sort of plateau off around about 5%. So this is all in keeping with that. So it could be that we're starting to see signs of the employment market or the labour market in the States just starting to sort of settle down. Okay, so my chart of the day is the dollar Swiss franc, and we've seen the dollar Swiss franc in this sort of downtrend channel in the last 4 or 5 months. And once again, you've seen a rally back towards the downtrend. Although obviously we got that spike here in mid-April, you'd certainly say that that is still a downtrend that is intact, and it's just unwound back to that downtrend. We had a doji candle yesterday, had no real direction today, and this is all coming as these sort of momentum indicators have unwound back to levels at which through this downtrend channel, the selling pressure has just started to come back again. So you're in the mid-50s now. You've got hit 60 in late April, but still, I think mid-50s, 60s, I think is around about where we're going to see the sort of pressure maybe starting to come back in. Look at the 55-day moving average as well. basis of resistance in February, March, basis of resistance in April, back to it again in May. Not only that, you've got the MACD lines back to neutral as well, so, and the stochastic starting to roll over. So if you look at the hourly chart, you can start to see this early signs possibly of this sort of rally rolling over. You've got bearish divergence on the RSI with this move to the new high on the MACD lines and the stochastics as well. All these indicators are rolling over again, and it just seems as though this sort of consolidation could well be a sign that this recent rally has run out of steam. And obviously that doji candle yesterday is a sign of uncertainty anyway, and that sort of at the moment is sort of reflective of the trading today as well, basically flat on the day. So is it that this this rally again has sort of come up against some key overhead resistance? And looking at this chart as well, 97.85, old lows, sort of breakout levels here arguably, but old lows back in December and January, reaction high, reaction high, reaction high in March, reaction high in April. So there isn't a great deal of upside potential if you take that as a big pivot as well. So you're sort of looking out, I think, for the next sell signal on this chart, and I think it'll be it could well be not long in coming, because I think all these indicators are now unwinding on your sort of medium-term basis, and unwinding to selling areas that the bears have sort of returned, generally speaking, over the last few months. So that's my outlook on dollar Swissy, and I wish you good luck in your trading today, and I will speak to you later. Thank you.